Good morning, everyone. How you doing today? We are recording this message early for you because we are once again on the road delivering some powerful messages that everybody can get wealthy. Yes, you live in the greatest country in the world, and you too can get wealthy if you're willing to sacrifice, be disciplined, and do it for a decade. That is the message we are delivering here in Orlando at a real estate event. And we will be delivering it every day. Again, everyday wealth builders right here on the hat. So let's talk about what is coming up the next week. We got some economic numbers starting on Monday with the New York Manufacturing Survey. Is the manufacturing environment still contracting or are we growing? Tuesday, we will get retail sales. Again, what is going on with U.S. consumers and home builder confidence? Will we bounce off the bottom? Wednesday, we will get housing starts. Again, remember, folks, housing starts is both multifamily and residential. Wednesday, we will get the Fed rate decision. And most importantly, we will hear from Jerome Powell. More on that in a minute. And Thursday, we will get weekly unemployment claims. Again, folks, remember last week was a dirty, dirty number. It is actually what caused the 10-year note to briefly touch 4% before spiking again on Friday. Was it a dirty number, meaning 262? Or are we going to go back into the 230s? Or are we once again taking the elevator up and having problems in the employment market? Also on Thursday, we will get U.S. leading economic indicators. And then on Friday, we will once again start getting Fed speeches. They are currently in their quiet period. And once we get to Friday, we will start hearing from Fed presidents. Let's talk about Jerome Powell. Because again, when he speaks on Wednesday, it will be market moving. These are the 7 things I am looking to hear from Jerome Powell. 1, have we started a rate cutting cycle? That last word being the most important in the statement, cycle. Or is this a one and done? That is going to be very important for us to understand because people will start betting on September or on October and December, and perhaps even 2 or 3 cuts heading into next year. How often will he talk about the jobs market? Will he reference the 911,000 jobs that disappeared? Will he reference weekly unemployment claims? Will they have a new expectation for the unemployment rate? Remember, folks, the last time we got the statement, the dot plot from the Fed, they were saying 4.4% would be the high watermark. That is truly in danger. So we will see where he goes from there. Will Jerome Powell be asked about stagflation? Remember, I think it was 6 months ago when he said, and I quote, "I don't see the stag or the flation." Well, folks, stagflation is all around the economy. It doesn't take an economist to see it. We do have below trend growth and we have inflation. So will he talk about stagflation? Will he once again hit tariffs? Will he talk about tariffs? Will he talk about tariffs being a tax? Will he reference tariffs rolling through the economy? Was there any talk of a 50? I think the market is clearly betting on only a quarter. Will Jerome Powell be asked, did you guys seriously consider a 50? And again, I will stand here this morning, recording this on Saturday for Sunday, saying that I believe a 50 is the right answer. And remember, folks, I'm the guy who all year said no cuts. But folks, when you get new information, specifically information that changes the game, i.e. the employment market, you're allowed to change your opinion. I now believe it was a mistake to not cut in July, and thus they should do 50. And then finally, will they talk about July being a mistake? I think the data that has come out subsequent to July has been horrific on the job market. And we now have June as a month where there was actually negative job growth. So will Jerome Powell talk about July pause being a mistake? Last thing I want to talk about, again, folks, a lot of you are in the real estate industry. Please, 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 please don't forget. A Fed rate cut, whether it's a quarter or 50, does not mean that mortgage rates will go down on Wednesday. Mortgage rates have already gone down because of the rate cut. Mortgage rates precede the rate cut. In fact, folks, it would not be shocking. All you have to do is look to last year. Mortgage rates might might go up on Wednesday after the Fed rate cut, depending on what Jerome Powell says in front of that microphone. So buckle up. Last thing I want to say is just a reminder for anyone out there, if you like it, lock it. Folks, stop betting on rates falling. A lot of you see a trend and think the trend will continue. Have you not learned your lesson? Some of you are sitting in mortgages today because you thought mortgage rates would get better 6 months ago. They didn't. Don't pay extra if you don't have to. Ray Dalio out again, talking about redistribution of wealth, now blaming AI, says that AI will be a tool that the top 1 or perhaps top 10% of you will use and benefit from, and everyone else will suffer. And thus, redistribution of wealth is the only answer. Again, Ray Dalio talking smack. Did you know that even though the doomers want you to believe it's all over, that U.S. household net worth has now hit a record? Yes, folks, in Q2, the household net worth is $176.3 trillion. In fact, household net worth increased $7 trillion in 90 days. Folks, at the end of the day, hopefully what this is teaching you is owning assets. Again, folks, if you are going to be an everyday wealth builder, like the audience we are talking to in Orlando, one of the key steps in this journey, we'll just go through all 3 steps. Step 1, increase discretionary income. You either cut expenses, increase income, or both. Number 2, you become an elite investor at something. For me, obviously, that was a buy box, 93703, single family homes, 3 or 4 bedrooms, 2-car garage, between 1,500 and 2,000 square feet. That was my buy box for 3 years. Your buy box will be different. In fact, you might want to buy stocks or buy crypto or flip classic cars or sell Pokemon cards. I do not care what you want to become elite at. Just become elite. That's step 2. And of course, step 3, be willing to do it for a decade. We are not here for the get rich quick. We are not here to replace your income in 3 nanoseconds. We are here to build wealth. On that front, something that I am watching is what Wall Street calls the wall of cash. The wall of cash. Did you know there is $7.6 trillion currently sitting in money market accounts earning somewhere between 4 and 5%? If the Fed starts a rate cutting cycle, that $7.6 trillion sitting in money market accounts will earn less money. And at some interest rate, that money will come off the sidelines and be put to work. Next, did you know there is currently $36 trillion in home equity? That is an average of $300K per house. That is a tappable equity of $11 to $12 trillion. I believe in the next 6 to 12 months, just because I've been studying the consumer for 30 years, if mortgage rates get into the 5s and they stay there, we are going to see $500 billion to $1 trillion in cash out refis. Yes, folks, the U.S. consumer is going to do what they do, and they are going to line up at the ATM machine and get some money. Get lots of money. Again, folks, remember, asset owners win. Inflation is a feature, not a bug. These are things we've been bringing you for years. I do want to thank 2 people who stepped up and bought our Vegas event. Again, folks, if you do this, you can get some goodies. More on that in a second. I want to thank Kenya and Gerald. Both Kenya and Gerald bought 2 tickets to our Vegas event, and guess what? They are going to get $100 in teachable credits. They are going to be invited to an October conversation. And perhaps most importantly, they are going to get both my books autographed. They are going to get the classic best-selling One Rental at a Time, and they're going to get what I believe is even more valuable, 15 Conversations with Real Estate Millionaires. Kenya and Gerald, Once I am back from this trip, we will get you some autographed books. We will mail them to you. Thank you so much for doing that. I do want to highlight our amazing school community. Here are just a few things we've been talking about in the forums. We need to congratulate somebody for getting their first co-living property live. We talk about the first showing being online. This is really taking good pictures when you're having a home for sale or a home for rent. That's where people see it first. Shout out to the team that did a Pittsburgh meetup. Yes, folks, more and more people are doing ORAT meetups across the country. Thank you, thank you, thank you. We have somebody who bought their first rental property, and we have somebody asking about Section 8 and evictions. Again, folks, we have wealth builders, nearly 500 wealth builders in the community, and I want to invite you to be a part of it. Just 67 pennies a day. Looks like JP Morgan is saying rate cutting cycle is starting. In fact, they say the evidence for rate cuts just keeps piling up. And lastly, let's shout out Lance Lambert from Resi Club, somebody that comes on the channel a couple times a month. He wrote an article in Fast Company talking about the 14 states that are moving to buyer's market. I went through the article. I got the top 5. If you want the full list of 14, you can just Google Fast Company or Lance Lambert, and you will get the article. Here are the top 5. District of Columbia. Number 2, Tennessee. 3, Washington. 4, Texas. And 5, Colorado. Folks, at the end of the day, this channel, One Rental at a Time, is about everyday wealth builders. I want you to know the process is simple, not easy. Again, folks, you need to get around the right network, i.e. our school community. You need to believe it's possible. You need to understand that it will take plenty of sacrifice and plenty of discipline. It will take a decade, but it's worth it. All right, folks, have a great day. Take care. Peace.